Welcome back. You're watching Market Fatatfat right here on ET Now, a show where we get to all the stocks buzzing based on news flow as well as on technicals. And talking about technicals, now we have Foram M Chheda joining us on the show and making sure that the show looks like it's all a women's special show. A very good afternoon to you, Foram. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is M&M Financial. A lot of brokerages have actually trimmed their forecast on this particular counter, but on the chart, do you think that there is a scope for trimming in the share price?
Well, good afternoon. Thank you for having me here. So when we talk about M&M Finance, so overall the trend has been up from the longer term perspective also and as well as from the near term. Talking about from a very short term perspective, so let's look at a little bit of the price action. So the stock price actually saw a bit of a steep fall in the month of Feb and March, and it took support on a very important moving average of a 200-day moving average. It formed a low at 218 and thereafter we've seen a very steep up move. It touched a high of 296 in the month of May at the beginning of the month, and then we've seen a bit of a consolidated move coming in. But this overall trend continues to remain up. It has been consistently moving up higher above the important moving averages, and when we talk about the volumes, there has been a very good increase in volume even at these current levels also. When it formed a recent high of 296, very good volume. So overall the stock looks quite good at current price also. One can maintain a stop loss below the levels of 278 and can look for an upside target of closer to 300 levels.
Okay, let's move on to the next one. And before I go to Monte Carlo, I'll mark the numbers for Arvind Fashions, because what you're seeing is a good operating performance that is coming from the company, good growth in terms of revenues as well. Look at the EBITDA as of now, which is flashing on your screens. It's at 124 crores versus an increase that we're seeing year-on-year basis. Margins at 10.9% versus 8% as well. And we're seeing a sharp jump up coming in the stock price. So obviously around 110 basis point increase in terms of the margins of the company as well. So Arvind Fashion, good set of numbers, increase in profits, increase in the revenue of the company, as well as EBITDA performance quite strong as well. So keep an eye out on Arvind Fashions. But let's move on and keep it with this fashion and retailers apparel space. And we have Monte Carlo that is in focus as well. It reported its numbers yesterday, post-market hours. But what you're seeing coming in here in terms of revenue growth, strong growth in terms of revenue, 46% growth on a year-on-year basis. While in terms of the net profits of the company, that has also seen around a 55% growth. Margins of the company, that has also been good. We have seen actually muted margins is something that is there. So not much of an impact in terms of those yarn prices which were quite high, the cotton prices which have seen an increase. That is subdued. So that is why we're seeing only a muted performance in terms of the margins of the company. But all in all, EBITDA seeing a strong growth as well. So overall, bottom line strong, top line strong growth. And that is what is keeping the stock up and in the uptick as well, up 16% in trade as of now.
All right, that's Monte Carlo for you, trading higher by about 16.5% on back of good numbers. But let's talk about Hikal or Hikal of how we call it. This particular stock also is moving on back of its numbers. One point in time, the stock was trading higher by about 12%, taking it to the highest level since March 16. Now the stock is trading higher by about 9% or so. And also, let's not forget that this because of this rise, the stock has actually snapped a 6-day losing streak. This company has posted approximately 74% year-on-year surge in their profit numbers, while the revenue from operations saw an uptick of about 7.4%. So on back of healthy set of numbers, as you can see, Hikal is trading higher by about 9% right now.
Let's move on and talk about Sobha then. Vamakshi, why is this one in focus?
Well, Vinny, the stock is in focus on the back of its numbers. When you look at the revenue, that saw a sharp uptick of almost 70% on a year-on-year basis. Revenue has gone up from 710 crores to 1,210 crores. Net profit, mind you, is up almost 3.5 times on a year-on-year basis, from 14 crores to 49 crores. The sales volume has also remained healthy at 1.48 million square feet, up nearly 10.1% on a year-on-year basis. The sales value also came in at 1,463 crores, which was up nearly 32% on a year-on-year basis, with average price realization increasing to nearly 9,868 per square feet, up nearly 20% year-on-year due to a good project mix. The company also delivered a 15.1% volume growth in FY23 versus a guidance of almost 10 to 15% volume growth. So the volume growth has actually come in at the higher end of the guidance. In fact, the management was also highlighting that the overall demand seems to be quite steady despite the higher interest rates. They've in fact guided for a strong launch pipeline of almost 7 million square feet in FY24 versus 4 million square feet in FY23. Further, the cash flow management remains its main focus area, and that has in fact resulted in net debt reduction. So on the back of that, we do have Sobha in focus.
In focus, and like Vamakshi also said that we had spoken to the management. In fact, here are what the management had to say on back of the sales growth and why, on what factor, which factor the sales growth is dependent on.
The entire sales growth largely is is dependent on our ability to do launches during the year, and it is last year we have been able to consistently launch, and our average launch was earlier about 2 million square feet, which we could double last year by about 4 million square feet, and those launches were consistently there in all the quarters during the year. So that has really helped us pull up our sales in last year. The sales will be dependent on our ability to launch, and we have a pipeline of about 14 million square feet of forthcoming projects, and we believe that half of those we can do it next year in the sense in FY24, and even if we do that, then that is also an.
Okay, let's move on to the next one. And Lisa, IRCTC, this one is focused on the back of its numbers.
IRCTC, they posted a weak, actually a mixed set of numbers, because if we look at the revenue, that was up 40% on year-on-year basis, stood at 965 crore. If we look at the net profit, that was up 30% on year-on-year basis. But if we look at the margin, that stood at around 34% versus 40% last year. And the margin, it was because of their internet ticketing business, which was flat on year-on-year basis compared to the other segments like catering segment, that was 49%, while the rail needs segment, that jumped 33%. But the internet ticketing business, that was flat, and this business has a high margin share. So because of the lower share of this business, the margin saw a suppression and stood at around 34%. So yes, that was on IRCTC. It was down around 3% in early morning trade, but as we speak now, it's trading flat and with a positive bias.
All right, so that's IRCTC for you. But Foram Tanla Platforms, where is this one headed from here on now?
Well, Tanla Platforms has been moving in a very broad consolidation phase since almost a year now. But however, within this broad consolidation, there has been a bit of a price action. From the lower edge or from the lower band of this consolidation, now it has moved near the higher band of it. And while moving this, it has given a breakout from an inverted head and shoulder pattern backed by a very good increase in volume. So it's very important to have some volume when the price is moving up. So it just confirms the bullishness in the stock. Perhaps since this following a breakout, the stock is now moving in a very narrow range, thus making it very attractive to buy at current levels. And importantly, the breakout has resulted in the price moving above the 200-day moving average, which changes the entire underlying trend in the stock. Thus, buying at current levels is quite advisable with a stop loss below the levels of 712, and one can even look for a target of closer to 800 to 810. This can be considered for almost 1 to 2 months.
Okay, let's move on and talk about the next stock that is in focus, and ITI is the stock that we're going to talk about on the back of its numbers. We're seeing weak performance in terms of the revenue growth of the company that's come in at, we've seen a decline of 32%, coming in at 775 crores. The company reported and actually swinged into a loss versus a profit last year, loss of 72 crores versus 355 crores of profit last year. EBITDA performance, obviously, was seeing a weakness as well. The company reported an EBITDA loss of 6 crores versus an EBITDA of 197 crores. So because of that, we're seeing a weakness in the stock as well, down almost 2%.
All right, shifting focus, let's talk about Kalpataru Powers, erstwhile known as, Kalpataru Projects, erstwhile known as Kalpataru Power. That particular counter has saw a huge block deal that took place earlier in the day. 6.3% equity is what changed hands in about 2 block deals. At one point in time, the stock had fallen by approximately 4%, taking the stock to the lowest levels lowest level since February 13. But now, as you can see on your screen, the stock has given up all of those losses And in fact, it's trading with a positive bias of about 3.5%. They snapped this two-day losing streak as well. The buyers and sellers of the huge block deal is not known as yet. But if you look at the stock right now, it is trading higher, 6.3% equity. And by day end or maybe by evening, we'll get to know who were the buyers and the sellers in this block deal.
Okay. Let's surely keep an eye out on Kalpataru Power and what are the buyers and sellers of the block deal there. But Foram, Dr. Lal Path Labs on the charts, how is this one looking like?
Well, following a downtrend for almost 4 months last year, this year the stock has now stabilized and now have been forming a base. While forming this base, it has moved above the 50-day moving average, which is resulting in the change in trend for the near term. This formation of higher top and higher bottom are observed, and the stock price has stepped above the 100-day moving average as well, which is now changing a bit of a medium to intermediate term in trend. Since there has been a transition in trend from downwards to sidewards and now from sidewards to up, it is quite attractive to buy at current levels and look for a target of closer to 2173 and maintain a stop loss below 1977. And additionally, these targets even coincide with the 200-day moving average, which can act as a resistance. So one needs to be careful that once it reaches closer to 2100 to around 2150, they can consider to start booking profits.
All right, moving on. Vamakshi is Jack heavy. That one is in focus on back of numbers.
Well, yes, a strong set of numbers is what the company has reported, and it comes as no surprise that the stock has hit its 52-week high after reporting a good set of numbers. Revenue did see an uptick of almost 28% on a year-on-year basis. It has gone up from 1,596 crores to 2,043 crores, and this in turn was driven by a higher year-on-year sales in the three segments of the company, that is machinery and equipment manufacturing, engineering, procurement and construction, as well as ethanol, wherein the plants are under construction in Philippines. Net profit also went up by almost 2.5 times on a year-on-year basis, from 39 crores to 93 crores for this counter. The margins have also expanded by almost 140 basis points on a year-on-year basis, from 6.7% to 8%, as financial as well as raw material costs declined for this counter. The order book also looks quite robust, standing at 8,321 crores, and in fact analysts are expecting execution to pick up with a gradual improvement in profitability as well. So a strong set of numbers. The stock has hit its 52-week high. As of now, the stock is gaining away with gains of about 12% as we speak.
Okay, let's move on and talk about specialty restaurants. Lisa, what is the news flow here today?
Yeah, it's on the back of results, Winnie. They posted a healthy set of numbers actually. We look at the revenue, it stood at around 87 crore versus 71 crore last year, an uptick of around 22%. Even the EBITDA margin that stood at around 15.6% expanded to 15.6% versus 11.6% last year. The outlook also looks quite favorable because they say that in the next 4 years, they plan to double their revenue 2 times, and also in the next 6 years, they plan to increase it by 3 times, and with an EBITDA margin of around 25%, and this will be primarily by leveraging the key brands and also by using the AI technology. And also they want to increase their international exposure and will be opening in key cities like New York, Singapore and Toronto. So the stock, we can see that it's trending downwards because mainly the numbers were quite in line. But if we look at the last 1 month, the stock has seen quite an uptrend. It was up around 12% in this month.
All right, that's specialty restaurants for you, but let's take a look at V-Guard. The numbers are flashing on the bottom of the screen. The revenues have seen an uptick of approximately 8% on a year-on-year. It's coming at around 1,140 crore rupees. That's the revenue numbers coming in. If you look at the PAT, however, it's a sharp decline on a year-on-year basis. 41% decline coming in on PAT. It's coming at around 52.7 crore rupees as against 89.6 crore rupees. Let's take a look at what the stock price of V-Guard is doing on back of his numbers, and there you go. No points for guessing the fact that the profit has seen a sharp decline. The stock is also plunged from the day's highest point, 1.5% downtick coming in for V-Guard on back of weak set of numbers. When you see the PAT, even the EBITDA is down by about 12%. It's coming at around 98.6 crore rupees as against 112 crore rupees a year ago. These are all consolidated numbers for V-Guard, and likewise I'm sure we'll see also a decline in the margins as well for the company, given the fact that there's a sharp decline in the PAT. Also, the EBITDA is showing a downtick, and the margins have come in at around 8.6 versus 10.6%. So that's V-Guard for you. Weak set of numbers coming in. That's reflecting in the stock price as well, Vinny.
Absolutely. Let's move on to the next one, and we'll talk about this one on the charts and GIC-RE Forum. Is it an interesting time to pick this one at the current market price?
Well, absolutely. So one, that there has been completely a V-shaped recovery. When we talk about this at the beginning of the year, the stock price had touched a high of 204 and it saw a fall and it went down to closer to around 127 levels. And thereafter, we've seen quite a steep up move. So this happened in March, and since March end, there has been a steep up move. So it's more like a V-shaped recovery. And at the beginning of the month of May also, the stock price had seen a steep up move from the levels of 155 to nearly around 185. Thereafter, it's been in a sideward range, but very much in a narrow range between 170 to around 180-85 levels. However, while the stock price has been moving in this narrow range, there has been some activity that is happening on the volume front, as well as the parabolic SAR continues to remain in a buy mode, and RSI has been showing some signs of positive divergence. Thus, buying in this narrow range has been favorable from a risk-reward perspective as well. Thus, one can look at buying at current levels. Current market price is around 178 to around 178.50, and stop loss can be maintained below 172. And one can look for a target of closer to 109.
Keeping an eye out on that stock and GIC-RE and those levels over there as well. Let's move on, talk about Sapphire Foods, because Goldman Sachs has come out with a report on this one with them maintaining a buy rating given a target price of 1,700 rupees per share. What they're saying is that investing in several high potential initiatives is something that will work out well for the company. KFC addition of chicken rolls as well as kiosks promising a good initiative as well. In terms of Pizza Hut, mass media advertising is something that will be driving the brand recall for the company. 1,000 square feet Pizza Hut format to improve the large town store economics as well. And in terms of the margins also, they expect the margins to start recovering in the first half of FY24, driven by KFC. Growth recovery is not likely before the second half of FY24, but surely seems like they're in the right place, and that is why Sapphire Foods is buzzing in trade today, up almost more than 1% in trade.
All right, moving on, let's talk about Best Agro. Remember, a lot of niche investors had entered this particular counter. It came out with its numbers and distinct set of numbers, because of which the stock saw a plunge of approximately 13% on an intraday basis, marking sharpest intraday percentage loss since February 2022. The stock has also hit a lowest level since August 29, 2022. The company reported a Q4 consolidated loss of about 8.4 crore rupees. This as against a profit of about 38.2 crore rupees a year ago. The agrochemical company's revenue also fell by about 14.9% on a year-on-year basis. The managing director of the company has said that the Q4 was difficult for the industry due to the high channel inventory, excess supply from China at low prices. They've added that the company's products were more focused on Kharif season, and they will now be introducing more Rabi season focused products to expand their portfolio. So that's a commentary coming in from management, but definitely the street is not too enthused about it, given the fact that they've actually posted a loss versus a profit a year ago. Stock is down 10%.
Okay, let's move on and talk about Apple India on the charts than Forum. When you look at it, yes, it's showing a sharp correction from those 1,300 levels. Now seems like it's trying to make that recovery there. Could we expect the recovery and a fast run up in the stock, or would you still wait and maybe we could see a consolidation?
Quite a fall in from there. Now it's just trying to stabilize. So that's exactly what is happening. And in the past few days, we've seen that the overall industry has been taking a lot of momentum, and especially the mid-cap IT space. We've seen a lot of momentum outperformance compared to the large-cap IT stocks. While Apple India remained more range-bound, that is, it's stabilized. But recently, there has been a positive divergence on RSI, which is indicating an upside momentum that can be expected. On the price factor, the stock is completing a double bottom formation, and with this ongoing price action, there has been where the price is moving above the 50-day moving average. So like almost a completion of a pattern. Along with that, the stock price moving above a short-term moving average indicates a lot of bullishness. So one can even consider buying at current levels of around 945, maintain a stop loss at around 916, and can expect a potential target of closer to 1000 to around 1007.
All right, moving on. Now, Vamakshi, how are NBCC's numbers?
Cheryl, a strong set coming from this counter. When we look at the revenue, that did see an uptick of almost 14% year on year, up from 2,441 crores to 2,790 crores. The margins are also seeing an uptick of almost 75 basis points, coming in at 3.7%, while the net profit, that is up almost 3 times on a year on year basis, from 41 crores to 114 crores. So overall, a strong set of numbers is what we're seeing for NBCC, and that is the reason why the stock is up nearly 1.5% in trade today.
Move on, and Lisa, DB Realty also in focus. Why is that, sir?
DB Realty is surging in trade and it's up around 7%, and that is because it's planning to sell its stake in 2 projects, which is Prestige Realtors Private Limited, which is in BKC, and the other one is Turf Estate, which is a joint venture LLP. Well, they have executed SPA in favor of this transfer, and the total consideration to be received from Prestige is around 978 crore, and from Turf Estate, DB Realty will receive a consideration of around 197 crore. So what the company said that they will be using this to reduce their debts and also to make further investment. So that's on DB Realty, and it's seeing a positive reaction on the back of this news flow.
6% uptick coming in for DB Realties, and that indeed was the last stock of the day. 40 stocks is what we discussed in this edition of Market Fatatfat. But with that, thank you so much, Foram, Lisa, Vamakshi, as well as Amar for joining us on the show. And it's a goodbye for Vinny, myself, and the team that put the show together. So stay tuned. Closing trades coming up next.